holy crap, this would have scared, pretty much everyone. So looking at here, the market pretty much went up sideways a couple days and then completely crashed today. There's a double bottom at 344, which is what I found. The reason I found it is I was actually looking on the 4-hour period for SPY, and just looking in right here, you can see the gravitational line is actually at 300. It's like right around 312 or something like that. So you can see on the 4-hour period, SPY pretty much went to 3012 or 312, and I believe it should bounce up off of there. So you can see generally SPY is trading upwards, and every time it's touched that pink line on the 4-hour period, it's pretty much bounced off. Right here it's touched. I'm assuming it's going to bounce off. Another thing that I am seeing is on the VIX. I can zoom out. Nope, it's not letting me zoom out. So the last time the VIX touched 42, like right around here, you can see within, I guess, the next day or so, the VIX does crash. It goes up really, really fast, almost too fast. So you see from here, it went from 35 straight to 42. And then from here, it went from 31 straight to 41. So since it went up way faster, 33%, I'm believing it's going to crash just as fast. I don't know how much it's going to crash, but it should crash. Because if the VIX is really high, it means our economy is really, really bad. And I don't think the Fed is going to want to let our economy crash. One other thing that you can see here is on the relative momentum. It's pretty much oversold, pretty much bottomed out at 0. So it should have a reversal for the SPY. So the SPY should be going up just a little bit. I believe it's bottomed out here, but you never know. So what I went ahead and did today was I had my work calls that expired tomorrow. I dumped those, and then I picked up VIX calls for 82 average. VIX puts for 82 average. So to protect myself, I sold my work that expires tomorrow because the odds of it going to 32.50 is probably not likely. And then I picked up VIX puts for $82. And I had 3 of them, and they're for 2 weeks out on the 26th. I believe in 2 weeks, we should see, from here to the bottom point, it's definitely been, about 2 weeks. I think from this top point of the VIX, from the double top, in about 2 weeks or so, we should see, the SPY start picking back up, and we should see VIX start crashing. So if that does happen within 2 weeks, I should make some money here, and so that's going to essentially hedge my bet, going with the market as the market goes up, along with these positions. So even though the Pfizer was pretty much going down when the SPY was going up, AMD was resisting SPY, work was resisting SPY. These are all kind of like weird, they're kind of like weird positions. They all have their own quirks. But overall, if the SPY is going up, VIX is going to be directly opposite of it. So if SPY is going up, I'm going to buy puts on VIX, and that's why I pretty much bought puts on the VIX. So we're going to see what's going to happen. I'll give you guys an update probably tomorrow. I'm going to try and see what the Fed's doing today. And then, Monday is definitely going to be a new day, whether the VIX continues to go up and the SPY continues to crash, or SPY is going to rally and then the VIX is going to crash. But overall, if I am wrong on this position, I'll have to stop out and go all cash and just wait until I figure out how, what direction the market's going to go. Overall today, portfolio is down $9.50, which was definitely a lot more drastic than I thought it would be. But once again, I knew what was going to happen. I just ignored what was going to happen. I should have caught this on Wednesday when I saw the yellow line was crossing the purple line. Anytime you do see that and you're buying calls that are SPY companies, then you most likely want to just exit all your positions and hold cash just to see what happens. And if you see it drastically drop the next day, that's probably a good sign. Like right here on Thursday when I saw it drastically dropped from Wednesday to Thursday, it should have been a good sign that I should have probably bought puts here and then let it ride down, sold the puts here, and then wait for the bounce and then buy calls going up. So overall, this was my fault. I didn't catch it. I had the late indicator of Wednesday of SPY and the early indicator of Tuesday for the VIX. And I'm not exactly sure why I neglected to take a look at the VIX and the SPY, but that's something that I did do. So make sure if you guys are trading, always watch the VIX, always watch the SPY before you enter your positions. I usually do that at the start of the day, but for some reason on Tuesday and Wednesday, I was just caught up in the gains from AMD, from work, from space, and all those that I just totally forgot about VIX and SPY. So definitely a good lesson to learn. If you guys learned anything, feel free to like, comment, hit the subscribe button, and I'll definitely keep you guys updated on my journey and what I've been learning trading during the COVID crisis. I've definitely traded during other crises, but COVID is definitely something I've never experienced. I've never actually traded in a recession, and also, there's just a crazy amount of volatility in this market. So we can see here on the 1 year to date, VIX looks like it may be going up, but it could also hook down. I'm not sure the Fed is going to let the VIX go to 50. That would be insane. It means that the market pretty much will crash. I can't see it going anywhere near the high of the initial COVID crisis. As far as SPY, it's pretty much went downhill. So we're just going to see what happens. I am going to be more bullish than bearish for the market, just because I believe the Fed is going to do something, but I could be wrong.